I want to welcome you to a very special edition of our ETF Prism report because in this edition we're going to be celebrating the 5-year anniversary of the formation of Taroso. And with that, we're going to talk a lot about how the industry has grown over the last 5 years. Now, while I was thinking about the last 5 years, I thought a lot about our last ETF Prism report where we talked about ETF bubbles and whether or not there's a myth or reality. And when looking at that, we pointed to the data. One of Taroso's core covenants is always to back up a qualitative concept with quantitative data. And what you see here, and I noted it in our last Prism report, was our ownership influence software, which simply looks at all the ETFs focused on US equities and then cross-references that or comes up with an average number of how much of the average market cap of every US company do ETFs own. And you can see here the number is about 6.31%. In our last Prism report, I noted that when we started this about 5 years ago, that number was 2.67%. So now let's look at the world 5 years ago. Well, when I was doing the research, I found this report or news article where it's citing a McKinsey study from almost exactly 5 years ago, where they're postulating, we'll say, that the ETF industry could grow globally to 4.7 trillion over the next 5 years. Well, we've had miraculous growth, but looking at Debbie Feuer's ETF Global research, we're not quite there. We're at about 3.8 trillion. Still amazing, still way more than a double. Amazing growth, but more to come. Now, we've all seen these charts and they look at the calendar years and how many ETFs are out there versus how much assets. I love this, but to commemorate Taroso's birthday, today I wanted to look at some of these statistics using our dates. So this is a chart that looks at the AUM in US ETFs on the day we started and each years after that up until our 5th year anniversary. So when we first started, the ETF industry was about 1.2 trillion in the US, and today we're close to 2.7 trillion. Now, the other thing folks usually look at is how many ETFs are out there. But one of the key parts of the Taroso research process is understanding the issuers. So I also wanted to add here this line, which is how many issuers exist today. And today, according to ETF.com, there's north of just about 80 issuers. And you can see the correlation in growth between not only AUM, but also issuers coming to market. Another thing we looked at was how many ETFs have opened and closed since we started, if we cover all of them and research all of them. So you can see there's obviously been substantially more opens than closes, but surprising amount of closes. In fact, since March of 2012, when we first opened, there have been 1,072 ETFs listed in the US that are new and 477 that have closed. But in terms of our workload, that's net 595 more ETFs to cover. Another thing that I wanted to take a look at is market share. And what we did is we looked at who is the dominant ETF issuers on each of our birthdays. And when we started, BlackRock was at the top. They're still at the top, but they have lost a little bit of market share. State Street with GLD and SPY was in a strong number 2 position. And you can see over the years, they've fallen to 3rd behind Vanguard, as Vanguard has consistently brought in assets through low-cost offerings, whereas GLD has been a harder asset, which is one of the larger ETFs from State Street. I was extremely impressed with how consistently Invesco PowerShares has been in the 4th position. we've watched Van Eck be in the 5th position, fall down, and then we've seen a massive resurgence as some of the risk-on assets like GDX and their amazing Angel high yield ETF have come into fruition. Wisdom Tree has moved quite a bit with the motions through various different themes, from dividends to emerging markets to currencies to currency hedging. Quite a bit of volatility in the leveraged products from ProShares. Guggenheim, pretty consistent. I was extremely impressed to see how Charles Schwab wasn't even in the top 10 when we first started, and now they're solidly in the 5th position. Another thing that we decided to take a look at was, well, what was causing all this flow? And, the movements in, call it, positions 5 through 10. And you can see it has a lot to do with outflows. We mentioned GLD. We can see in this year, 13 to 14, GLD had a massive outflow, and so did IAU. This is definitely performance related. Barclays, having the ETN of the emerging markets, had a massive inflows and then outflows, and that's why they dropped off the high market share standpoint. I think there's definitely been an obvious trend away from ETNs. One thing that was really interesting to me was that although we see some of the hot ideas like dividends or bank loans or agriculture or currency hedging having big flows, what we don't see is the steady Eddie, call it Charles Schwab approach. And you very rarely see any large Vanguard broad-based ETFs up here either. Schwab doesn't make this list of any outflows, of any massive outflows, which probably has a lot to do why they're now steadily in that 5th position. We also looked at, seeing as how we just looked at the negative and we're getting close to the end, I thought we'd go to inflows, a more positive note. So we saw that big outflow on GEM. What's amazing is most of the inflow came the year before. We see PIMCO and when BOND came into place. We see Vanguard consistently across the board. We see iShares consistently across the board. And what again is missing is Schwab. Schwab has really built a massively diversified base of assets because they're not in the top 10 for creation or inflows, or the top 10 for outflows. So these are just some of the examples of the research we've been doing, not only on ETFs, but the issuers themselves. And that really leads me to the future. With this being our 5th anniversary, and tell you one thing about the future. The research that you've seen here today has been part of a process that Tarosa's been building to build a benchmark for the ETF industry. We call it the ETF Industry Exposure Index, where we build a benchmark that includes ETF sponsors, the liquidity providers, the service providers, the exchanges, the index and data companies, and more will be coming out about this over time. A really interesting factoid here is, as we've done this research, we've discovered that 74% of the revenue generated by ETF sponsors flows through to a public company. Very exciting things. So I want to thank everybody for your time today and look for more and more wonderful ETF research from Tarosa.